Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is August 21st, 2023, and I'm going to go over your three threes for the week. First, I'm going to go over your top 10 major asset classes, their performance, and how we're positioned. Then I'm going to take a look at the chart of the S&P 500 and their support and resistance zones, and there's been a change this week. Then I'm going to go over the top three market movers for the week. So let's jump on in.
Okay, let's go over the top three market headlines from last week. The major U.S. stock indexes fell by more than 2% as the S&P 500, NASDAQ, and the World Equity Index recorded their third consecutive weekly declines. This downward trend follows a three-week string of gains that ended in late July. On Tuesday morning, we got the latest monthly U.S. retail sales report, and they exceeded expectations. The government reported that sales rose 0.7% in July, which topped consensus estimates of 0.4% for that same period. On Wednesday, we had some economic problems and concerns about debt levels in China, specifically in the real estate sector, which weighed across the board for the Asian markets. And the Hong Kong stock index entered a bear market last week after sinking more than 20% from their recent highs. Also on Wednesday, we received the latest U.S. Federal Reserve meeting minutes, which signaled that interest rates are likely to remain higher for longer. And the yield of the 10-year U.S. Treasury bond on Thursday briefly eclipsed 4.32%, which is the highest in 16 years, going back all the way to November 2007. As the story goes, as bond yields rise, the stock market does the reverse and sells off. So it was a down week across the board for the major asset classes on this chart. All right, let's go over the top 10 major asset classes, their performance, and how we are positioned on a short-term basis and intermediate-term basis. On a short-term basis, less than 3 weeks, there was no change, but as you can see, the bearish equity markets continue to sell off across the board, and we still remain bullish for the US dollar and commodities on a short-term basis. Zooming out to an intermediate-term basis, there was a few changes. Most of them happened overseas. The world ex-US and emerging markets switched to bearish on an intermediate-term basis, and real estate is also bearish on an intermediate term basis. The U.S. markets are holding on for now, and they remain bullish along with the U.S. dollar and commodities. All right, let's take a look at the chart of the S&P 500, and we were adding to the market back in late March, and well, we have gone to protect mode as of August 15th. We're going to go ahead and pocket some of these gains at about 10%. So we'll go ahead and book them in. And so see, these are some of the gains that we've booked over the past year and a half. Now, let's take a look at the support and resistance zones on these chart. And I've been saying that we're probably going to break out and then start looking at these other support zones to see if we start to break out or break down into them. Well, we since broke through this resistance zone or support zone here, and we're probably going to test this next area. There is a gap here that at the 42.30 level, which will probably, we are going to, the market likes to fill those gaps if there's a huge jump in the market, and that's one, and that's what I said. It'll probably test down in here over the next few weeks, and then we'll see if we get that relief rally, that bounce off there, or hopefully we don't come down and fill this gap down here in the 4,000 level. And if we do, we're looking at the 42.30 at an 8% correction, and the one down here at 4,000 is about a 13. Both of those are very normal pullbacks, breathers in this secular bull market run that we have been experiencing since the great financial crisis. So both extremely healthy, and both probably, one of those are probably going to happen here over the next month. All right, let's look at the top three market movers For this week, on Tuesday, Wednesday, we have home sales data. On Tuesday, we get existing home sales, which are projected to have fallen to 4.15 from 4.16 from last month. And a lot of that has to do with the rise in the mortgage rates, which are hitting a 21-year high. So that's what's going on with the housing market. And on Wednesday, we get new home sales, and they're likely to rise a little bit more than they did last month, and that makes sense. The new homes are able to put a little bit more incentives to bring in new customers, and more so on the existing homes. On Thursday, Friday, and Saturday, we get the Jackson Hole Symposium, and that's where the central bankers, financial ministers, and economists from around the world all gather, and for at Jackson Hole, Wyoming. And this year, they're going to be all discussing this interest rate environment, which is the highest in the last 20 years, and how they can steer away from a recession or a soft landing. That will be the discussion, and Powell's talking on Friday, so that could be a market mover for this week. Also, number 3 are the earnings. We got Home Depot, Target, and Walmart last week. Well, the rest of the retailers are reporting this week. Lowe's, Macy's, Kohl's, Nordstrom, Dollar Tree, etc. will be reporting. But the big one comes on Wednesday after the market in NVIDIA. That is the Apple of today, with all the talk about AI, to see what NVIDIA and to see what their future prospects are. So that will be extremely close watched on the close on Wednesday. So that will definitely be a market mover one way or the other. All right, that's it for this week. Thank you for joining us. Our next update is Monday, August 28th. As continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.